Lennar sliding today after announcing second quarter earnings. The home builder citing the choppy mortgage rate environment as a headwind, as you might expect. Here with more, Yahoo Finance's own Dani Romero. So talk to us about not just Lennar, but what it tells us about the housing market.
There was actually some very interesting commentary from Lennar that talked about what the current consumer is feeling right now. And they said first, number one thing was consumers are feeling a bit distressed. And so that is creating some credit challenges who are trying to some way jump into the housing market. They said that is similar to last quarter. Another key thought that I thought was very interesting from this earnings was that consumers are very sensitive to the interest rate movement. So there is a direct correlation when interest rates go up. That means builders would most likely offer some form of incentives like those mortgage rate buy downs. They'll probably boost those up. That's when the builder upfronts the cost to lower the rate on the loan. And third is that consumers in a way are expecting a discount and incentive to afford a home. And I thought that was really interesting that consumers are expecting some form of an incentive when buying. And then in the second quarter, Lennar did cut home prices. So we could see that in the next upcoming earnings with KB Home. The average sales price for a home for Lennar was about $426,000. And that was a 5% drop from last year, Julie. So another thing that they did reveal in this is that the Fed rate cuts, if that does materialize, will that be some form of competition for them, or it will also boost the housing market in general? So they're not too worried about or concerned that would cause some form of extra competition. They're pretty bullish that they're going to.
It would be good news for them also.
Totally, but then there's more homes for sale, right? So then you're competing with the resale market and then the new home market. But Lennar was very bullish in saying we're not too concerned that if it does unlock more inventory, that it would cause a problem for them.
Interesting.
Yeah. It was, Dan, I was talking to Jay McCandless over at Wedbush, who covers these names in the sector, and he is great. And I sort of asked him the same question, kind of what is just as a financial analyst who just lives in this world, what does just the broader environment look like? And he kind of painted a sort of a continued mixed picture, because he said demand was still there, like the demographics still work because you have so many. Just think Gen Z, millennial Americans, they would love to buy a home. But on the other hand, he said affordability is still such an issue. 30-year fixed, 7.02% still, according to Mortgage News Daily. It remains a challenge.
Well, and the other thing that we have to consider too with the existing home market is that homes that are 40 years or older, they don't have an entry-level price point. So that's why it really does make it attractive to jump into the new home market, because you're going to be offered some form of an incentive, whether it's the buy downs, whether it's the closing costs, whether it's the home price cut. It really makes it attractive when you are an entry-level buyer. And for KB Home, who's about to report earnings, they are specifically focused on first-time home buyers. And so that really does kind of signal across the board for all home builders. They've kind of changed their focus. They're kind of like, let's try to help the entry-level buyer right now. But yes, I think that, inventory still remains limited. Builders have been ramping up housing starts. So that looks really attractive right now for the market to really fulfill the gap that's going on between both markets.